Hey guys, welcome to the podcast. And today I've got Ryan DeRousseau, and he's a fee only financial advisor coming out of Long Island, New York. And I'm really happy to have him on the show to talk about the work that he does, how he helps clients. We're going to talk about cash flow, choosing the right financial advisor, doing it versus doing it yourself. And it'll be a great conversation. So, Ryan, welcome.
Yeah, thanks for having me. Ryan DeRousseau, that's a tough name. You did it well, way better than most people, but just gonna say how to say it real quick.
Yeah. Yes. Start off by introducing yourself and we'll dive right into the conversation.
Yeah, I'm a Feely financial advisor. I work with a lot of those in private practice space. Some of them are therapists, some of them are psychiatrists. I have physicians as well. And in fact, my brother is a physician and he's one of my clients. And so I work with a wide range of sort of situations and experiences, but at the heart of it is a lot of times of making sure we're getting the most out of the business so we can enjoy more of like life and how to do.
Yeah, interesting. Yeah, so one thing that comes to mind for the audience is since you work with these high income executives, professionals, doctor, lawyer, dentist, you work with these types of clients, what's the number one thing that you see that contributes to their lack of wealth? We'll start with lack of wealth first.
Lack of wealth, particularly like with my audience, is not setting fees correctly. And so they may have operating expenses that are just eating out the margin of whatever sort of fee is there. And so either they haven't necessarily taken like a fine tooth nail to why the costs are so high, or they haven't properly set the fees, which may depend on which area they're in. Maybe it's dependent a little bit on the insurance side of things. That's going to dictate things a little bit. Maybe it's dependent on just the willingness to increase fees. And so then talking through a lot of that. So there's a lot of that from the business side of things. And then uh, the other part of it is not properly using the business to your advantage for like long-term savings and stuff like that. Because if we are building revenues the right way, where we're seeing really good profit margin, we should be able to save for long-term goals and also cover our short-term needs. And if we're not doing that, something's wrong within the mix of where the money's flowing once it gets to the business side of things.
Interesting. So my adjacent question to you is, what is the number one thing that you see among your high income earning clients that contributes to wealth, that gets them ahead, that gets them financial free and they can basically live a better life?
Yeah, it's really investing. Those who invest for the future, whatever that sort of looks like for them, because I have some clients who prefer investing in the markets, some prefer real estate, and others elsewhere. But like, as long as they're putting their money to work, it gets them out of that month to month like need for a certain amount of income. And so, like, I have a lot of therapists within my group, and they are unique because they get paid by what they call button seat hours. They are sitting, talking to someone and getting a session, right? And so it's very difficult if one, they haven't set their fees up, and if they have not invested to even create time to go on a vacation or do stuff that you want to do when you think of like wealth building and whatnot. And so part of it is just figuring out how they're properly allocating their revenues and profits for investing purposes so they have the wealth and protection that they need in order to do the things that they actually want to do. And so those who are really investing for that purpose are like 10 steps ahead than everyone else.
Yeah. I'm in the market, compound, start earlier, save more. And
Sure.
yeah, which is counterintuitive because we hear about all these, like before it was like you saw athletes and celebrities basically end up broke. But now it's actually happening to a doctor, lawyer, a lot of doctors. So there's a misconception that income equals wealth. And so I know for the podcast, dispel this myth that income is not wealth.
Yeah. So income is something that you get every year, and it can change year by year. It can go up, it could go down. But wealth is creating something beyond you that's growing beyond you, that can support you beyond your hours in the office or whatever. And part of like I would say one of the most common sort of things that I may have to work with even a high net worth person on is just the cash flow in terms of what's going in, what's going out, because they haven't even learned how to budget when they haven't learned how to invest and they haven't learned how to do these other things. But you can make $1 million a year in income. And if you're spending $1,000,001, you're in the red. And you may be able to do a lot with that money, but over time, that's going to be diminished because you're not going to make the $1,000,000 every single year. And so one is figuring that out, but also realizing that if you're going to grow long-term wealth, money has to be invested. It has to grow beyond you. It's beyond what your sweat equity is doing. It's growing beyond that.
Yeah. The next question I have for you is what retirement planning tactics are most crucial for self-employed professionals? And again, how early should they start planning?
Yeah. I could start that second question, answer that question, second question, as soon as their like profits like get going on the retirement planning, because it's honestly one of the best sort of side hustles you can have is just putting money towards a retirement plan, whether it's if it's pre-tax, you're getting a tax break right now. If it's after tax, like in a Roth or something like that, like a Roth 401k, then it is you're not paying taxes on it ever again. And so both can add real value to your net worth and reduce stress about your overall sort of uh, like wealth picture if you have that growing even as your business is whatever your business is doing. But in terms of the plans, it's really comes down to a lot of times the SEP IRA or the solo 401k. And if you are a solo practitioner, like a lawyer working for a solo practice, or it's a possibility that you are in a partnership where you are getting paid to your business as like you have an S corp, the business is an LLC, you're getting paid to the S corp, so you could open up a solo 401k potentially in that situation. Having a solo 401k is going to be more valuable long term because both the SEP IRA and the solo 401k have the same top limit. It's just easier to get to that top limit in the solo 401k, where the SEP IRA has more rules and restrictions around it. And so if you are operating on your own, go with the solo. If you're operating with other people under you, then you're going to have to go with the SEP IRA or actually get a real 401k. And that is a lot of rules and regulations and liability that you're taking on. So you just have to be careful with that. It can be really useful though. But within a SEP IRA, you just have to know if you're giving yourself 20% of your income as a distribution or as a contribution, then you have to give everyone under your umbrella 20% as a contribution. And that can really sap resources, that can really sap profits. And so you just want to be aware of what you're doing if you're going to start incorporating those plans.
Interesting. Yeah, I remember I was setting up my solo 401k and it was just it got set up, but it was just it's actually great tax advantages, but it was just really painful, all this paperwork
Mhm.
and so my next question for you is so you're a fee only, you call yourself fee only financial advisor and kind of
Mhm.
dispel the difference in fee structure for financial advisor and how is it different than just so like I educate myself and self-direct my own investments?
Mhm.
Talk to us about that.
Yeah. So there's three ways that financial advisors get paid. One is commission, one is fee based, and one is fee only. And so commission is what you think of, right? They sell a product. It's an insurance product. It's a mutual fund. They're getting a percentage of that. You go to an insurance company and you're talking to a financial advisor and they're going to tell you, "Hey, we're fiduciary. We have to put your best things forward for you, but everything's going to point to products that they sell and they're going to get a commission for that." Now, if you go to a fee-based group, they can say, "Hey, we're going to charge you a cost for a financial plan. But within that financial plan, we also might sell you products like insurance, mutual fund, or whatever to that supplements what we're making from it." And then fee only means the only people I'm getting paid by are my clients. I am not selling insurance. I am not a mutual fund salesman. I put clients into insurance because they need it, or I put them into mutual funds because they need it, but I put them into the right insurances or the right mutual funds for the purposes, as opposed to if I'm getting a cut on the side. And so I strongly encourage, if like one message gets across to your listeners, is if you're going to find a financial advisor, get a fee only one, because it's, in my opinion, the only one you can trust. I used to be a journalist before I do what I do now, and one of my first jobs was covering financial planners. So it's what I do today. And the only people I would talk to for sourcing were fee only financial planners, because they were the only ones I could actually trust for advice. And so I lived it, I believe it, and that's the sort of difference there. Directed index or direct investing is really just you doing it yourself. So you're not paying a financial planner to invest. Now, I am someone who can work with clients whether I'm investing their assets or not. I have subscription plans. A lot of my clients I work with, we just meet every quarter and we go over part of the plan that we're developing. And I may guide them on what they're doing on the investing side, but I'm not investing for them. They're investing. Meanwhile, others, they do not want to do that. And so they may have me invest for them. And so you really have to figure out what you're comfortable with, where your knowledge is and what you have time for, because that's depending on all of that is going to be how much you're going to be paying for that financial advice.
Yeah. That's really interesting. There's this joke among brokers. The next question I have for you is, especially in this retirement phase, and assume a lot of your clients are millennial, Gen X cohort. Is that a fair assessment, or are you having?
I have a wide range, but I definitely have some in that age group. Yeah.
Yeah, a lot of. So there's what I want to ask is, what type of questions are you getting about newer types of, because like you mentioned, mutual funds and insurance products, and a lot of these are very old and expensive and slow and inefficient. And so what kind of questions are you getting from clients about is it newer asset classes such as real estate, private equity, Bitcoin,
Mhm.
oil and gas? How is that conversation shaped?
Yeah, real estate is one of the oldest investments. Honestly, it was before the market even existed. Real estate was there, but I would say so. When I have many of clients who want like income sources, like secondary income sources, and if they have the ability and risk tolerance to handle real estate, that is a common one that I work with them on and I guide them on and whatnot. And when it comes to other assets like private equity, I don't get into very often, but the Bitcoin, particularly the ETFs that have come out, and I think you said oil and gas. I am all for speculative bets if you want to take speculative bet in a very small portion of your portfolio. So I have clients who take maybe 5, 10% of their assets and they invest it however they want. And that is totally fine by me, because if that disappears, they're totally fine. But then if it like goes up big, hey, even better, it's a bonus. My big concern as a financial planner is, one, are you protected elsewhere? So is the majority of your assets going to grow to the size that you need them when you need them? And then what's the tax tactics to get them out tax efficiently? And that's really where a lot of my focus is going to end up lying, because there's a difference between an investment manager and a financial planner. Like, as a financial planner, I am an investment manager. I work with you on your investments, but I am taking account of your entire financial picture, not just what's going on in the markets today and what I think is going to go up or go down. Whereas an investment manager is only really focused on making sure you're investing as much money as you possible, because that's how they're getting paid. They want you to invest as much as possible. They get a bigger percentage if you do.
Yeah. Yeah. The reason why I asked that was I'm just trying to get a sense, because I know institutions before the Bitcoin ETF, they were like, no. And then they're starting to allocate a little bit just to, again, like you said, this kind of asymmetric risk and looking at correlations like assets that are uncorrelated. You know, and I know because you're in your next meeting. So talk about what you can do for clients, how you can help clients, and how they can reach out to you and work with you.
Yeah, absolutely. I am here to help with your financial questions. That financial question could be buying the next house, could be figuring out how you're allocating your investments, how to buy your first rental real estate, whatever that sort of is, even how to manage your business. I am here for that. If you want to connect with me, I'm at thinkingcapfinancial.com, and there's a newsletter there, and I'll send along the link to Chris. Connect with me there, or there's a form that you can reach me if you want to reach out directly. And then if you're a psychiatrist or a therapist out there, I also have a community of private practice owners where you can go ask questions about your business, ask questions about your finances, and you can get answers from other therapists, other psychiatrists, and me as well. So I will also include that link there.
Excellent. Thanks so much for coming on and interesting conversation.
Yeah, thanks for having me. I appreciate it.